Triple Witching Friday. No, it's not a new Netflix horror series or a Harry Potter spin-off. Though, if you ask traders, it's like financial witchcraft. In this video, I'm breaking down what it is, why it matters, and how a $4.7 trillion market wave shows up 4 times a year to wreak some good old-fashioned Wall Street chaos. Triple witching happens 4 times a year: March, June, September, and December, when 3 types of financial contracts all expire on the same day. 1. Stock options, used by investors to buy or sell stock at set prices. 2. Index options, same concept, but for entire stock indexes. And 3. Index futures, bets on where an index will land in the future. Individually, not too spooky, but when all 3 expire at the same time, that's when the cauldron starts bubbling. Think of triple witching like a market thunderstorm, full of volatility, weird price moves, and a lot of caffeine. Why? Because traders are scrambling to close, roll over, or settle massive positions. This Friday alone, we're talking $4.7 trillion worth of contracts expiring. That's not pocket change. That's makes a hedge fund sweat kind of money. It can lead to sudden price swings because everyone's adjusting at once. Huge volume spikes, hello, chart overload, and momentary distortions in stock prices. If you're a day trader, buckle up. Triple witching is your Super Bowl. Wild swings, fast moves, and a chance to make, or lose, a lot in minutes. But if you're a long-term investor, it's more like background noise. A little storm on an otherwise normal day. It may nudge prices here and there, but your retirement account isn't going to explode because of it. That said, even long-term investors can benefit from understanding why their portfolio looks like a roller coaster that day. Spoiler alert, it's not your fault. It's just witching hour. Want to make it through without losing your financial soul? Here's how. Avoid impulsive trades. Volatility equals emotion equals mistakes. Watch volume spikes. It's not always what it seems. If you're long-term, don't panic. Market turbulence does not equal market crash. If you're trading options, double-check expiration dates. Triple witching can sneak up fast. Triple witching may sound spooky, but it's just another day in the wild world of Wall Street. Think of it as a full moon for financial nerds. If you found this helpful, drop a wizard emoji in the comments, hit that like button, and subscribe for more no-fluff breakdowns of what's really going on in the markets. Coming up next, quadruple witching? Yes, it exists. And yes, it's even weirder. Stay tuned.